I wanted to share some analysis on a company that I started analyzing from a tip I got from one of the viewers of one of my videos, and that's on Perdoceo Educational Corporation. They do higher ed education, and historically they did it on site, just in a university setting for both higher ed degrees, like bachelor's degrees, as well as occupational education. They've made the transition to online education, and they're doing a really good job. They're growing their company, they're profitable, and generating free cash. I wanted to share my analysis of this company with you, take you through my process that I use when I analyze companies, and consider buying their shares. I wanted to share that analysis with you. My name is Victor. I have an MBA and a lot of business experience, and I like analyzing companies and then sharing that analysis on YouTube. Do me a favor and like my video and subscribe to my channel. That'd help me out. Now let's get into my process and let's evaluate Perdoceo. When I look at buying shares of a company, it's pretty much like buying a share of that company. So I like to think like I'm buying that business. I want to know that I want to be in that business. I want to be a part owner of that business. I also want to be part of that industry. The second thing is I want to know that the employees, the management team that's running that business is doing a really good job. And I want to know that the balance sheet is in good shape. If you bought a business with a bunch of debt and a bunch of problems, boy, you would have made a bad decision. So I don't want a bunch of debt. I want a clean balance sheet when I buy into a company. And I want a discount on my investment. I wouldn't buy into a company if I thought, hey, I'm paying more than the company is worth. So why would I pay more for a stock price than it's worth? No way. I'm going to buy only shares that I get a discount on, and I expect my investment to go up in value over time. And based on the answers to that, I buy, hold, or sell a particular stock. So Perdoceo is in the education services industry, and it's a really important one. A lot of people cannot, take a 4-year gap in their lives and go get a university education. They need to do it at night. They need to do it remote, and they provide a really important service, especially for somebody who wants to maybe earn a degree or a specific certificate that would help them get a promotion or a better job. So it's a very good thing they're doing. The one thing I would comment is that this industry tends to really get bad headlines. Every time that Congress looks into private education, it tends to really frown on these types of companies because students get take these loans out and they get into debt problems. So that's one of the headwinds that they have is at times there's some really bad press that gets announced over the private education industry. I took a look at their financial statements and I really liked what I saw. Starting with their income statement, the revenue is growing at 9% if you look at the most recent quarter that was closed. And what's also important is they're really profitable. Really good to see that a company is not only growing their top line, but they're also nice and profitable. They actually bring down 23% net income on that revenue, so that's very good. The balance sheet in particular looks really good. Their most recent, quarter, they really have about $569 million of cash on their balance sheet, and they really don't have any debt. They have some long-term leases, but they really don't have any debt. Keep in mind that this company is a little over $1 billion in market cap. So they have more than 50% of their market cap right there on the balance sheet in cash. This business has been generating really strong cash flows from operations. I'm showing the last 3 full years, and this year, which is halfway through, is consistent with what they produced last year. So that's really good to see. And their capital expense, I think they had some outlays in previous years to go to this online format of educating people, but their capital investments have gone down over time, which is really good. They only have to put a very little capital back into the business, so they get to keep a lot of this operating cash flow and make it free cash flow, which is one of the key metrics that I use when I value a company. I believe that right now this stock is discounted 93%. That's a big discount. How did I get there? Now, I believe it's a 93% discount, which means that each share, I believe, is worth $31.71, but the market will sell you shares at $16.43. My valuation uses two methods. First, I want to know from a free cash flow method what all those free cash flows are going to produce in the future are worth today. And that is, it starts with what they produced last year, $132 million of free cash. I'm going to grow those free cash flows by 6%, and 6% from years 2, 3, and 4, and then have a terminal value that's only going to grow at 2%. Nice conservative rate. These are all the cash flows we expect the company will produce in the future. I'm going to discount it by 9%, weighted average cost of capital. And that gives me a net present value of all those cash flows equaling $1.9 billion in value. I'm going to add the cash they have on the balance sheet, $569 million. There's no debt. So I get to a $2.5 billion equity value for the company. Their market cap's only $1 billion. So it really offers up a big gap between where I think the company's worth based on free cash flows and the market cap. In fact, it offers 134% discount if you really discount those free cash flows. In other words, each share is worth $38, but you can buy shares at $16 if you look at the cash flows. Earnings per share is good and strong. It's $1.88 is what is expected for this year. I'm going to go with a PE of 12, which is this is a growing business at 9%. It could be much higher if you use their industry could have a PE of 24, 28, but we're going to go with a PE of 12. And that gives us a earnings per share method price or value per share of $18.24. Now the market will sell you shares at $16.43. So earnings per share method offers an 11% discount. I put more weight in free cash flow method because this is cash that can be returned to investors. So I take a 2/3 portion of this number as a factor and 1/3 of this number, and I get to a 93% discount available on Perdoceo. So scorecarding this company and seeing, do I want to be a part owner in this company? I do. And I think the industry is a good one. I think educational services will continue to be really important as we see our economy change. I mean, how many jobs have changed from being an on-site employee to remote? So there's a lot of skills that have to be really taught to the generation of workers that we have today. And this management team's doing a really good job. And I could state that just based on their financials. For them to perform at that level with profitability, I can only say they're doing a good job. They have no debt, so excellent job keeping that balance sheet in great shape. And they offer a great discount. So I'm going to be a buyer of Perdoceo. Looking at their stock price over the last 5 years, you could see that it's had some volatility, especially around the COVID years. You had really big drops, and it really settled down at a really low stock price. I have a value of the stock at $31, so it offers a big discount. Recently, it had a really nice jump, and it's somewhat stabilized at around $16 per share. I'm going to be buying some shares. I like to average in my investment and buy shares over time. And I'll be buying a good starting position with the stock, and then I'll be buying on dips going forward, just accumulating a modest position in this stock. Year to date, the stock is up 14%, and they pay a dividend of 2.68%. Small companies like Perdoceo don't have a lot of analysts cover it. So a company like Perdoceo flies under the radar, meaning not a lot of attention is paid by the big investors, big analysts, and so forth, and hedge funds. But small investors like myself, individual investors, we have the advantage when it comes to these companies. It's great to find a company with great financials like this where I can buy in at a very low price and watch my investment go up over time. Thank you for watching. Do me a big favor and like my video, and also subscribe to my channel. I'd appreciate that. Good luck investing in 2023.